The death of warehouse industrial investments. Now, we've seen unprecedented boom in the last 4 years in industrial warehouse investments. Now, traditionally, warehouse industrial investments has always been the top in terms of giving you the best returns and yields in terms of cash flow, but also the lowest in terms of capital gains. And it has always been one of those tough things to really rent out because, let's face it, once you have a warehouse, it can't really be retail, it can't really be office space. So it's very hard to repurpose if it's, for example, large industrial logistic warehousing. So right now, why did we see a boom in the last 4 years? And does that boom mean that it's really, really hard now for you to get into buying a warehouse property? What kind of warehouse property should you be investing if you're really thinking of investing into it in the next 12 months? And is it even worth it? What kind of returns? And finally, are you paying too much for your warehouse property? I'm going to answer all these questions on this video, but make sure you stay tuned to the end where I'm going to be sharing with you what type of properties that is going to sustain the current changes in the market and what kind of industrial properties in what areas should you be looking for to give you a secure investment if you want to hold on to that property in the next 5 years and really reap the benefits of that in both cash flow and growth. My name is Helen Tarrant. I help everyday Australians become wealthy and retire financially free via commercial property cash flow. So if you want to find out more about what I do, I help you in education, I help you in educating you in how to invest in commercial property, but at the same time have a boutique commercial property buyers agency. Now, we only do commercial property buyers agency in comparison to other buyers agent out there where they do both residential and commercial. We've always been commercial. I started investing in commercial property since 2012 and have actually leveraged my portfolio to over $10 million within the first 5 years and have already retired on my commercial property cash flow. But I came back into the market to help everyday Australians become wealthy through commercial property, and I'm going to do the same with you as well. So if you look back, you've seen us do countless deals and we've shown you the yields throughout time. I'm still the only educator that does free events around commercial property, and we are the agency here at Unicorn Commercial Property that the savvy investors go to if they want to beat the market. So let's get started. Now, you're thinking of investing in a warehouse property, but what you have seen is that in the last 4 years, the warehouses continue to grow in not only popularity, in security, and also in value. So you want to get into the market, but have you missed out on the market because they've had 4 years of boom? Is it going to continue? So let's dissect this a little bit. So this is a classic example here that I put a client into an industrial warehouse property in the Sunshine Coast. So this property is in Warana, and it is a industrial property somewhere around that 300 square meter space. Now, at the time, it was divided into 2 tenancies. You don't have to, but this property itself was divided into 2 tenancies, and it had one on a slightly shorter lease, one on a longer lease, and it was bought for about $900,000 on a 7.5% yield. So yield in commercial property is the cash flow return of that property. So on 7.5% yield on a $900,000 property, it's about $63,000, $65,000 in net rent. Now, when I say net rent in commercial, it is after all the outgoings have been paid and that what comes into your bank account is totally net rent. And yes, that means insurance has been paid. Yes, that means strata's been paid. Yes, that means management fee has been paid. And yes, it means all the rates has been paid. So yes, paid by the tenant. Right? So what comes into your bank account is that absolutely net amount that now you use that to pay the mortgage. Now, we all know what happened in 2020, right? So this property was literally settled as COVID was about to hit, right? Back then, commercial property wasn't the favorite, and definitely commercial property with industrial warehousing wasn't the favorite at all. So we got a really high yield in the Sunshine Coast. Now, that meant that right then, at that time in 2020, the interest rate was probably around that 3%, 4% mark. This particular client was clearing somewhere between $25,000 to $30,000 on this one property alone. After all outgoings, all mortgage, he was clearing that in hand. So that's a fantastic deal. Now, fast forward 4 years and he's gone to refinance this property. So we're at the beginning of 2024. He's refinanced that property. Now, the value of that property came in at $1.257 million. And the yield, which is a cash flow return in that local area, has dropped to 5.5%. Now, what does that mean? It means that more and more people have actually come into the Sunshine Coast area and bought properties, especially warehouse properties, because as more and more people come in to buy this property, it pushes the prices up and the returns down. Because let's face it, we can't just put up rents infinitum. We can't just put up rents willy-nilly. And if you look at it, in the last 4 years, rents in industrial really only started to increase in the last 12 months rather than now. Only in the last 12 months have we seen an increase in the rents in industrial warehouse properties. Previously, it was pretty low, right? And it's because most people in manufacturing or logistics don't have hiring a warehouse built into their, hiring a warehouse and paying massive rents built into their pricing model, right? And so warehouses typically are charged the lowest rents amongst retail and office spaces and any other form of commercial property. So really, you wouldn't be getting a lot of rent for your warehouses. But what all of a sudden happened in the 3 years between 2020 and 2023 is that we started working from home. People started e-commerce businesses. People started switching from being in a retail to being in a industrial warehouse for example, communities, workshops, for like dance studios, for karate, for play centers. It started becoming a little bit more retail than in traditional warehousing. And as such, the rent started to go up. And as a flow-on effect, it pushed the value up along with the demand. So this particular property in the Sunshine Coast became 1.257 million from first buying it in 4 years ago for 900,000. So that's a 40% increase. That's a 10% year-on-year increase. However, rents has also gone up during that time. So the investor himself has picked up $25,000 to $30,000 on the first time buying this property in the beginning. Over the 4 years, even as the interest rate went up, he still accumulated cash flow in the hand. And as the interest rate hit its peak at about 7% or so, when he went to refinance at the beginning of 2024, he was still getting 10 to 15,000 in hand because of the rising rents, right? So he was able to pull out an extra 300K to buy another property against this property without him using servicing from himself because the rents were already showing positive. So nothing was relying on him, and he was able to go from one property to now the second one, the $300,000, allowing him to buy another $1 million property. That's a fantastic dream scenario. Now, can you repeat this if you want to invest in industrial warehousing? Now, I've got an interesting article that I've just picked up from the Property Council of Australia. This particular article, and let's read it, says, what drove $3.3 billion investment in warehouses over the last 5 years? This article was written in April 24 in 2024, so this year, right? And it was written by the Property Council. Now, what's really interesting is some of the points I've highlighted here is Australia's industrial property sector is booming with 33.3 billion investments in warehouses over the past 5 years. Now, that's just exactly what I illustrated in my example previously. And driven by business embracing not only green initiatives, according to a new report from Savile Australia, but the adoption of renewable energy, advanced manufacturing is fueling the demand for industrial space nationwide. That's a good thing because it means that there's still going to be more demand coming through. Now, earlier on this month, this is April, the government announced it will create Future Made in Australia Act, which hopes will revitalise manufacturing in Australia, because we know that's been in decline, led by net zero goals, and more details are to be announced during the budget. So obviously that's bringing together new initiatives and trying to rejuvenate the manufacturing industry, which is going to be great if you're looking at investing in warehouses. Now, what's also interesting here is later on the article, it says over 10 million square meters of new industrial space has been added to the East Coast market since 2019. So developers are actively building more warehouses out there. 10 million new industrial square meter space in the last 4 years. And that did not stop the growth and the value of the properties, right, in industrial, right? Now, it all goes on to say, while industrial demand has historically been driven by warehousing and logistics, manufacturing is supposed to see a greater focus going forward, which is great because Australia doesn't have a manufacturing arm or a really robust industry. So having that will put more demand into the warehouse space. With a strong policy framework and increasing investor interest, this rebound is poised to reshape Australian industrial property market for years to come. This is good, right? But this is a really interesting thing. Then he goes on to say, while global industrial investments dropped by 39% in 2023, which meant that people stopped buying industrial properties as we came out of COVID, Australia's industrial sector saw a small decline, 35%. Right, that's still quite significant in terms of a whole investment space in terms of commercial property, right? With investment volume significantly higher. So while we had a decline in industrial sectors, meaning people are not opening new industries and utilizing industrial space, that decline of 35%, the volume of investments increased by 56% compared to pre-pandemic averages. So there is 56% more people investing in industrial warehouse properties today than they did in 2019. So you've got a lot of competition in the market if you want to invest in industrial warehouses right now here, right? So goes on to say, following an unprecedented 3-year growth period marked by face rent soaring up to 80% in selected markets and vacancy rate at below 1%, there has been a significant surge in capital-seeking investment opportunity in the industrial sector. So this is where it comes down to what I want to recap today and give you some strategies moving forward, is that we have seen rents go up because traditionally, again, industrial properties has been one of those, rents are just like $100, $120, $150 a square meter, nothing changes, right? But you brought the retail tenants in, because ultimately when we dissect and look at the commercial market, who pays the highest rent? Your retail tenants, right? Because they're direct to consumer, the consumer ultimately ends up paying for it, and they pay the highest form of rent. Now, they pay the highest form of rent. If you look at it, they might be medical, they might be people who provide a professional service to you, there might be allied health, all sorts of these tenants pay the top dollar in rent. Government tenants. Now, they've shifted their dollar because a lot of their business have gone online, right? You can have e-health, you can do that, but you can also do a lot of logistics in terms of shipping you products, and they've moved to online rather than retail stores. They've just taken this money and put it into warehouses, right? And because they've taken this money and put it into warehouses, they've actually pushed up the rent. So instead of being $120 or $150 a square meter, a lot of that rent has gone to $250 a square meter. So that meant that the rents have gone up. If you invested in a warehouse here before the rents went up, you would have had exponential gains. That exponential gains is the rent, which now will give you over 10 to 12% cash flow return on the property. Plus, the value of the property also went up, which meant that now you picked up 30 to 40% growth. It's a trifecta. It's a dream investment. That is if you invested 4 years ago.